All right, everyone, give me a second. As always, want to make sure that we are indeed live streaming. Last time I did this with Weston Nakamura was Black Monday in Japan, in Japan in August, when suddenly everyone became an expert on the reverse carry trade, which is funny because Weston and I have been talking about it for some time. I myself turned quite bullish on that day, August 5th, saying something along the lines of I thought they would rally the shit out of the market after that, which they did. And
The
everyone,
Nikkei went up 10% that next day after you
it
said
was
that.
unbelievable. Yeah, exactly. And everyone became ultra bearish that day. VIX hit 65, and now everyone forgot about the reverse carry trade. And maybe it's time for a reminder. So if you're watching this on YouTube, X, LinkedIn, on my accounts, or on Weston's, we can see your comments. So let's make this interactive. I know it's late on the East Coast. I'm staying up. Weston's obviously in Japan, so we're doing this different time zones here. But if you want to engage, ask us questions, please don't hesitate to do that. We'll be able to see that and bring it up live. This will be an edited podcast, as always, under Lead Lag Live. The last time, like I said, we did this, we had 30,000 live views. I don't think we're going to get that high because the markets were crashing everywhere and everyone was high-fiving us. But hopefully we'll get a good reach here. So with all that said, my name is Michael Guyad, publisher of the Lead Lag Report. Joining me for the Rough Hour is Mr. Weston Nakamura, Across the Spread himself. If you don't know Weston, you really do need to follow him. I say that sincerely. His commentary, his research is off the charts. And I think he's got some tremendous perspective when it comes to Asia. So we're going to talk about Japan. And let's talk about China. I've seen people say that China has brought chopsticks to a gunfight. Funny way
that's what I said, and I was told that was inappropriate.
Well, yeah, I don't know. In today's environment, I don't know if that's wrong or not, but we'll definitely hit on that. So, Weston, people already know about your background, but just for those who don't, quick 30 seconds about who you are and why you're qualified to even talk about this stuff.
Oh, I'm not qualified. I am a guy who's unqualified, but nevertheless talking about this stuff. No, what I do is, so I used to work in institutional finance on the trading side, and also equity sales, Japan equity sales, for mostly hedge funds, long short hedge funds. And I basically, what I do is I try to look for things that, from a more so like a US based kind of normal investor of like US equities and things like that, and things that they would be concerned about, that they're missing, or things that they should be concerned about that they're missing from other parts of the world, mainly from Asia. It's like things that stem out of Asia that can and have and will impact the value of your portfolio. And so I try to point those out, and so I do that via Substack, YouTube, and other mediums as well. So that's what Across the Spread's sort of mission statement is.
All right, so I'll start with the easiest question I can start with. Is the reverse carry trade over? And I know that sounds like a silly thing to say out of the gate, but I find it strange to me that people think that something that's been ongoing for 2 decades gets resolved in 2 trading days. And I'll take it a step further. Everyone then references the point that you look at the CFTC positioning, everything's flipped long yen, and the assumption is that means that the reverse carry trade must be over. It can't possibly be that simple.
Well, okay, so this is what I'm very glad, and I know you're asking this kind of sarcastically, but
Can you tell?
Yeah. So since our discussion, yeah, there have been many yen carry trade experts that have emerged out of the woodworks, and that's fine. But the whole approach of like this infamous JP Morgan note of the carry trade is not yet done. There's like it's 60%. There's still 40% left or something like that, right? As you and I discussed last time, first of all, there's no way. Everyone has a different definition of what the carry trade is, what kind of format it is. It's not just like yen futures on CFTC and stuff like that. So there isn't a way to calculate it, and even if there is, everyone's going to have a different definition or disagreement of what is and isn't like constitutes like an actual carry trade. So that's kind of like a very kind of pointless discussion. But that aside, the whole like approach of is the carry trade unwind done or not done? So let's say JP Morgan research actually did somehow calculate whatever the actual figure of the outstanding carry trade is, and they have concluded that like 60% of it is has been unwound. Why is the assumption that the other 40% has to be? Why does the assumption have to be like 100% of the existing carry trade open has to vanish? Like that's the part that I don't get about that approach that everybody seems to like, you know, kind of gravitate around. Like there's still X amount left. Okay, it could be however much left. That doesn't mean that they're going to be force exited or chosen to be exited or anything like that. It just means that there was X amount. Now there's X minus Y amount. And that doesn't actually give you any sort of, you know, forward-looking perspective or anything at all. So I maybe I'm just an idiot, but just I don't understand the point of the, you know, that kind of that approach, that question. I know it's not what you're necessarily asking, but
no, but that is a valid way of thinking about it, just logically anyway, right? It's like it doesn't have to be in quotes finished. You know, it's like it's not like it's a progress bar, right?
Exactly
from that standpoint.
And let's even put aside that like they could also be put back on during that time where other people are deleveraging. You know, there are better traders. That's why like I always say, like, especially when you're trading macro markets, we all get the same exact markets. We all get the same exact, you know, crude oil futures or, you know, AUDJPY cross or whatever it is. We all get the same markets, and we also, all of us, don't know what's going to happen at the end of the day in terms of green and red blinky ticker markets. Okay, so markets are actually very, very fair. It doesn't matter if this is your first trade ever, if you've been doing this for like 50 years. Those two things remain true. We get the same markets. We don't know what's going to happen at the end of the day. You can't really insider trade, you know, global macro assets for the most part. So if that's the case, why do you have such massive disparate, you know, outcomes in terms of trading? Why do people make billions and other people lose everything and then some, and then their house and everything, right? It's because we're not trading the actual markets. What I say is that we're trading with or against, you know, ourselves, essentially. That's like the variable, because the constant is the markets. So, you know, with that said, like when it comes to something like the carry trade or whatever it is, like people who are being forced unwound out of that position, there are better traders in those same markets who are buying into what they feel are very sort of not attractive levels, but maybe attractive levels of volatility or whatever it is, that and different kind of time horizons that they could go in and out of. So to calculate the size and how much is left of is just another one of these impossible sort of, you know, tasks that I think is very kind of pointless and meaningless. What's more useful, I think, is to see, all right, so when the yen carry trade was blowing up the last time you and I spoke, everything basically was like correlation of 1 to the downside. And then eventually, though, that correlation of 1 across assets not gonna last forever, obviously. So you have to monitor when do things start to then like kind of decorrelate, and when does the following the yen for tick movements of NDX futures, for example, when does that relevance kind of dissipate, if it's going to actually accelerate even more. Like those kind of relationships is what someone should be looking at, and not necessarily like some arbitrary notional amount that's left out there.
Yeah, what I've been telling people, and I really do believe this, if I've been right about anything in the way this has played out, it's that the reverse carry trade, even though it seemingly only lasted for 2 trading days, did bring back certain dynamics, most notably the flight to safety trade. Ever since August, whenever the stock market has been down heavy, you see long duration yields fall. You see long duration treasury prices rally. You see credit spreads widen. And you haven't seen that really up until that reverse carry trade for a moment kind of played out. Now, I keep saying that's a preview, and I keep saying the main event is still coming. Main event is still the bigger reverse carry trade, at least in my view. Let's talk about the more recent price action here. So futures were down pretty hard Friday, very suddenly. Everyone made note of it. This is a little bit different than what happened in August because this is politically driven, you can argue. Explain what's gone on. What's the catalyst for the yen move and the Nikkei move today?
So an absolute clown. This is not my opinion. This is, I guess, a fact. An absolute clown was chosen as the next prime minister of Japan. No, the reason I said that, the reason I say this is because, okay, so this guy Ishiba, he won the LDP, the Liberal Democratic Party leadership election. He's going to become the next prime minister of Japan. All right, good for him. This is his 5th attempt at becoming prime minister. 5th time's a charm. He's been doing this. He's been attempting this for like something like close to 40 years, which is not a good thing in my view, because that's a guy who is hell bent on he needs to become prime minister. That's it. Come hell or high water at this point. Like that's what his goal is. Okay. So what are his policies? Well, he doesn't have any like actual concrete ideology or something like that. All of that has to be compromised in order for him to fulfill his like 40-year project of an attempt of finally getting this this leadership role. So we'll get to that in a moment, because like what the kind of implications are of what his tenure will look like, under his leadership and all that. And like I said, as you probably guessed from what I just said, it's just going to be a big question mark. But what happened on Friday was very, very interesting. So I wrote a Substack note about this. Everyone can read it for free. It's called what's it called? It's called "Did Japan Market Just Fire Another Warning Shot Upon the LDP Elections?" Now, it was a very interesting day in markets, not just for Japan but globally, because you saw kind of a normal day. You saw, equities actually in Japan have been rallying really off of this kind of China stimulus that's been going on to uplift. But, the Nikkei index has been rallying for, the last 6 days or so, has been rallying very hard. And then on Friday, the cash index closed up about 2.5% or so. And that was happening because there was the LDP leadership elections underway. And that was happening, the votes are being cast. But this is not like a general election, by the way, where like the population like votes, where there's tens of millions of people. This is a couple hundred of like the top ranks of the of the LDP leadership. And so it's very easy and quick to count, a couple hundred votes. You get results like within an hour. So round one, there's 9 candidates, and they're all basically more or less the same, okay? Because they're all the same political party. So there's not like it's going to be like a massive difference between one or another. Like, yeah, you can like a lot of people, a lot of people are going to say like that I'm an idiot for saying that, and I'm very ignorant, probably. But that's what the reality is, okay? However, there is one difference, one different candidate. Takaichi. It's a woman who is basically kind of a woman embodiment of Shinzo Abe, with a little bit more kind of right-wing conservatism kind of sprinkled in there. But she was actually becoming the favorite, and where she differed was everybody else more or less like opined on the Bank of Japan, as they should not be, but about their rate policy, and everyone was kind of on board with like Bank of Japan normalization, as well as like independence. Like that's their kind of job, and we're not going to wade into that. But she was the only one who was kind of anti rate hikes, pro JGB buying. She even said that weak yen is a wonderful thing. It's not a bad thing, it's a wonderful thing. Okay, so that's a very stark difference. That's the candidate that actually started to surprise and win. So you see the first round of elections, she actually came in at the top spot, and not only that, and got the most votes, but she got more votes than expected. Number 2, but she didn't get enough to actually, win outright for that first round. So she had to do a runoff with the number 2 person. That would be Ishiba, the guy who ultimately wins. So it's Ishiba versus her. Okay, that result comes out at around 1-ish, or a little bit past 2 p.m. in Japan. So they do a second round, and the vote results for the second round come out after Japan markets, cash equity markets close. Cash equity markets close at like 3 p.m. And so those votes came out at like 3:15ish, 3:20. Okay, so essentially, what markets were doing was that in the last, call it 30 minutes or so into cash close, into Friday's cash close, you saw a ramp up in Nikkei equity indices, as well as in dollar yen, going up a full percent from the open, all on this assumption that this woman Takaichi is going to win and become the next prime minister of Japan. And she's apparently Abenomics Part 2 is coming back. Okay, so that's so BOJ normalization, that's not going to happen. Basically, was kind of the bet, and that was being reflected in markets. And then stunningly, when that didn't happen, it's not so much that this Ishiba guy got elected that the markets, that Nikkei fell like 5% in, at the, PM reopen at 4:30 p.m. But and dollar yen crashing like several handles down. It's not because of him being prime minister. It's that markets were pricing out a very kind of dovish, I suppose, or anti-normalization stance, prime minister Takaichi to basically price that out. And so you just got Japan assets to crash. The weird thing, however, was that the rest of the markets were kind of fine. Like they were totally insulated. Like just look at global equities in Europe, US, all of that. Like if you see the Nikkei down, Nikkei futures down 5% or more, you would expect UK FTSE and the DAX index and Euro stocks, as well as like Nasdaq and E-minis and all that, just to at least be down at 1.5% at least, or something like that, right? But that wasn't the case at all. Same with the yen as well. You saw like just pure yen strength against everything, against every major currency, every EM currency, against gold, and yet things like other major crosses like AUD, USD, Euro, dollar, Euro, pound, whatever it is, were actually like kind of, they closed the Friday session like literally unchanged, like 0% or plus minus, 1 or 2 basis points. Whereas the yen is making like a 2% move. This is a major currency pair, right? So it was a very weird thing where this was like a very Japan idiosyncratic event, obviously. But the fact that didn't spill out into other cross-asset macro markets on multiple, or on at least 2 different major asset classes, equities and FX, that's what was very kind of unusual. So I was thinking either the rest of the world is going to have to catch down, and you're gonna have like a semi Black Monday again, not like a down 12% like the last time you and I talked. Either that, or there might be a potential trading opportunity when cash open happens this morning in Japan, because cash equity markets in Japan didn't have yet a chance to actually react to any of this. This is all happening after the fact, right? And I thought maybe this is just purely futures driven, just pure kind of algos and all that. And so single stock traders or single stock investors have, the cash equity markets haven't actually reacted yet. So let's see what happens at 9 a.m. this morning. And maybe it'll just be like futures just ramp back up and something like that. Or you'll get a temporary crash, and then you get like certain kind of single stocks in Japan, and buy like into falling knife, which is something that I did earlier, that I talked about in my note. I did get a fill. I am up 8% for now. It wasn't as quick as I had hoped, this recovery, but the Nikkei still, the cash indices are still down right now, and it's very puzzling to me that it's not being spilled out. So that actually might then argue for the yen carry trade is over, has been over. It's no longer connected to the rest of everything else like it was, a month and a half earlier, right?
Or the complicating factor is China. So that's why I'm bringing this up. So I put this post. I said if the China move is real, as the stimulus measures were getting announced, and you started seeing that huge melt up. I said commodities are like hell. The Fed's fucked. You get another round of inflation. This is going to get much more complicated, because Japan, if the reverse carry trade is not done, is still a negative. But the market globally is going to see anything that China does as being bullish for commodities, which is bullish for inflation, which should be bullish for risk on assets.
Yeah. So, all right. So here's the thing: is what I was talking about with like kind of the mission statement, if you will, of Across the Spread, or the purpose, or like the niche. developments out of Asia that impact global markets. The reason that I have, so I've started Across the Spread like about a year ago, a little bit less, and I've been basically writing almost solely about Japan. Whereas in my previous podcast, Market Death Podcast, I would actually spend a good amount of time talking about China. My goal was always what matters for, this is why I use the term green and red blinking tickers, like actual markets themselves. I don't care about like fundamentals of like the real world economy and stuff like that. I care about our mark-to-market value of our portfolios and price action, stuff like that, and what's moving what. China impacts the real economy. Japan impacts more so the like financial markets. That's why it's been kind of more balanced and skewed that way. However, in the past week, you are seeing a massive slew of some policy action as well as a lot of jawbone and promised and yet to be delivered, and who knows if they will be actually delivered, but nonetheless a ton of actual market support, equity market support out of the PBOC and out of China. And so that's why now like China actually does now matter, because now they're actually directly impacting the green and red blinking ticker financial markets world. And yes, you are right. Like the kind of the Japan thing is very much so also very much tied to China as well, right? Like what I said in my kind of my note, I think I tweeted this out too, was that what happened was when you saw that 5% crash down in Nikkei futures, Ishiba, the guy who just got elected, he was a former defense minister of Japan, and he's also a China hawk. So if the Nikkei was just like up, 5% or so in the last week, riding off the coattails of what the PBOC is doing and like the double-digit gains in, China A shares and Shanghai and Hang Seng indices and all that, and if it's basically just doing that, well, then this guy's, election just wiped out all of the China-led upside out of Japan indices. So there's also that too, because Japan did outperform like E-minis, NASDAQ, and all that as China was ramping up, over the course of this kind of stimulus like unveiling over the last several days.
Do you get a sense that the China stimulus is going to be enough to cause a bit of a self-fulfilling momentum move here, that it's not just sort of initial euphoria that then results in disappointment?
You mean for like the real economy?
For at least for the financial markets, for China's markets. I mean, you look at emerging markets here in the U.S., all those went vertical, right? Because so much of that is China-driven.
So, like, honestly, to me, like, this is, we've seen this movie before. I don't know how many times. This isn't any different. Like, literally, I don't know if anyone remembers, but first of all, okay, why did they do this now? It seems very obvious, and some people say it, but it seems like not enough people are kind of pointing this out. But the reason that they have finally are like acting on like kind of big bazooka measures and all of that is because the Fed finally cut rates. So they couldn't do massive easing and stimulus until that happened, because the currency would be crushed. Ironically, once they started doing all this, the yuan has been strengthening quite a lot. It's now it has a 6 handle. But that's because, just like Japan was for the first half of 2024, China was getting sold off as the EM that it was. Its currency and its bond market, like it's like the Chinese yields, for example, don't rise with like the USD CNH pair together like they fundamentally should. Just in the same way that JGB yields rise as dollar yen rose like alongside it. That shouldn't be happening, but it's happening because people are just dumping Japan assets because they're treating it like an emerging market that they want nothing to do with. So now you're getting strength even with rate cuts and a lot more sort of stimulus support from the central bank, from the central government, in various different angles toward the housing market, for the equity markets, for like individuals getting kind of like, I guess, lower income individuals getting cash payments. Supposedly, none of this has actually happened, by the way. They only like the kind of marginal rate cuts to their to their various policy rates. But yeah, so when you have that happening, like we have seen this movie before, and the last time I could remember actually seeing this movie, and by when I say this movie, I mean like when people are talking about this is the Mario drug, the Chinese version of the Mario druggy, like you know, what was it like whatever it takes moment.
Yeah, the whatever it takes 20.
Yeah, the whatever it takes moment, right?
Yeah.
So the last time, so China did have another whatever it takes moment. This was not the first one. Do you remember when the last one was? The last one was the day that the Fed began to hike rates back in March of 2022. That day, that FOMC day, like whatever it was, March 16th, 2022 or whatever, okay? And everyone knew that that was the day that the Fed was going to hike off of 25 basis points. That was well telegraphed and all that. They were way behind the curve and all that. So that was a well-known thing, well priced in. Nobody was surprised when that happened. But before, that happened on that very day, during like these hours, right? Let's say today would be like that Fed day. Like suddenly out of nowhere, out of Beijing comes like suddenly like these massive kind of stimulus programs that they just start to just unleash. And they would tell like literally saying to like, hey, long only asset managers, this is bottom tick buy Chinese equities. They're literally saying stuff like that. And Chinese equities went on a massive, massive rally. And it was not a rally, it was a short squeeze. But you saw like, Alibaba, Tencent, all that, those were up like 20% or so in the last like hour of trading when that dropped. Okay. And then the FOMC, it was time for the FOMC later that day. And then so kind of things kind of paused, right? Because nobody is going to rush in to buy Chinese equities before the Fed initially starts to hike rates. And once the FOMC delivered that rate hike as well telegraphed and as well priced in, then you saw this massive rally in the NASDAQ and all that, like up 2.5%. And people were saying like, why would the NASDAQ rally like 2.5%, 3% into the close on a rate hike? And they're making all these ridiculous reasons, trying to find reasons like US related reasons, when in reality, it was because there was a massive effing bazooka that was shot out of China, a verbal one, a jawbone one at that, but nonetheless, Mario Draghi, whatever it takes moment was shot out of China on FOMC day, and that just paused, and then that continued, for like weeks and weeks later, and people are trying to think of like the Fed reasons for that. So literally, we've seen this before, and so what happens is this is how the movie goes. You get the short squeeze. This time, it's probably going to be like you're going to get some like long onlys or actual long positions in as well. But yeah, that kind of feeds upon itself. It momentum begets momentum, and it always comes at times where like it's never like an ideal time to buy U.S. equities. Like they never look like attractive. They only look always attractive relative to other things, but they're never like cheap enough. They're never like, unless it's like super ridiculous financial crisis like 2008 type of things, right? Or COVID or whatever. But otherwise, people are happy to buy China or like allocate money to China because it's always just beaten down so much, and they think that there's valuation there, and so they do that. And you get the David Teppers and all that, who are long, and then they go on TV and then they talk about it. And when they do that, by the way, when David Tepper's on like CNBC talking about how he's long China, do you know why he's doing that? He's not doing that because this is like some charity, like, oh, let's help these like the viewers like with the stock tip. He's doing that so that you guys, not maybe you viewers, but so that the general public buys up equities that he can sell into. Like, I guarantee that he's either selling into that as he's saying that, or at the very least, he's done buying. He's not like continuing to buy, right? But you get that, and then the policy doesn't come, or it just gets forgotten about and fizzles out, and then you get this slow like slump back down, and then kind of macro fundamentals of structural problems within China still exist and all of that, and then it just disappears, and that can disappear very quickly, and then it's just a rinse and repeat. So this is no different, really. It really isn't. Like, the names and the programs are different, fine. They always are. So therefore, that's a consistent thing. So that's what we're seeing right now.
But is there a chance though that if they see the equity markets turn around, they'll go even harder? It's like I'm reminded a little bit of during the COVID crash. The Fed kept on trying to do things to stop the COVID crash, and they kept on escalating, right? Because they had already committed so much stimulus in the last week or last few days. I mean, I get the sense that China can't really back down. So if they see their market starting to tank again because of some doubt, they're going to come in even harder.
Yeah. So what I talked about throughout 2022 or what was 2023 during when I had the Market Depth podcast and wanted to cover this was what I said was at the time, and I still hold this belief, is that so you guys remember COVID zero, China's COVID zero policy, right? I called it stimulus zero. Okay. China, Xi Jinping was instituting a stimulus zero policy. In other words, he was instituting a policy very much like COVID zero that was clearly a very stupid and ineffective policy that he just was the stubbornness and all that they just kind of held on to, and one day just kind of tossed it out the window as if it never happened, right? So I said, look, at any point, they could turn this like stimulus zero policy of not providing this kind of bazooka thing or whatever that you were seeing this past week, that could just turn on a dime suddenly. However, when that happens, I don't, other than the initial burst upwards, I think that it's actually going to be a bad thing in terms of like bulls on China for the fundamental economy as well as for financial markets, because the initial move, again, it's like a very much short squeeze driven, so it's position exiting. But if China hadn't been doing anything when they really needed to for the last 2 years or so, right? Through like every single like macro data point, and like just plummeting stock markets and weakening yuan and ever stronger fixes on the daily fix rate for the midpoint fix rate for the daily fixing for the yuan, and all these kind of measures that they're these nibble around the edges measures, and they're doing everything except for like the big giant bazooka of massive rates slashing in, the post 2008 sort of China stimulus that kind of revived the world, if you will. They've done it before, they're choosing not to do it again, and they're holding back on it. I think that what I'd said then and what I still believe now is that I think that if they do that, it's actually going to be like it's going to backfire, because people are going to start to think like, okay, China hadn't been providing any of this through horrendous, by every measure, horrendous like markets, financial conditions, economy that called for that. But now they've flipped on stimulus zero. So how bad actually is it now? Like, if they had been avoiding it, or if they've been staunchly like against it, but now they've suddenly changed their mind, what do they see in this opaque economy that we don't see? And then you're gonna get maybe a short-lived upside. And if that happens, it's kind of the same thing as kind of interventions. The worst thing that could happen with the intervention, or the worst thing that could happen with like a policy like this out of China, is that they step in, they do very non-free market sort of heavy-handed activity by the state, and markets kind of do what they're react the way they hope for, but then they actually come right back, right? In this case, like Chinese equities start to fall again. Then what? Then you're really screwed. And then when markets see that you just shot this massive cannon, this bazooka, and then the markets kind of deflected it and are now resuming the downside, then they're gonna, rightly or wrongly, it's gonna become a self-fulfilling prophecy of believing that the policy is ineffective, and then you get killed. So I think that's the biggest risk. Like, I think that China waited too long to institute anything and I think that now it's just gonna kind of make people wonder what the hell is actually going on. And then if the markets actually don't continue this, then the markets are gonna say like they have no bullets left. They have nothing up their sleeve. That was supposed to be the big bang and didn't really work. And then you're not. And then at that point, you're not going to be able to revive it. You could throw the kitchen sink at it. It's not going to work. So that's kind of how I feel about it.
I would think commodities would be the tell on that first. I mean, right now commodities are agreeing with the optimism.
Yeah. So with regards to that, I would say that gives. I personally, I don't touch Chinese equities to short nor to long, and it's nothing to do with like my kind of Western political free market capitalist democracy ideology or whatever. It's nothing to do with that in terms of ideology, but has everything to do with the fact that I tell people all the time, look, you could like invest or you can like trade China all you want to, but you just have to make sure that you understand what it is that you're trading. You're not trading in like capitalism. Not that like US or Japan or whatever is pure free market capitalism either, but like it's called the Chinese Communist Party, okay? It's not a secret. All right. So like if you're running like DCF models and like kind of Western based like valuations are not the reason that you should be going long or short something in China. It's a policy, it's a top-down policy thing. Okay. So if you want to trade it, you have to know what moves those green and red blinky tickers. And that's much more of a reading of government bodies or people behavior and priorities and incentives and all that. It's more of a game of that, and that's not a game that I know. Okay, I know how that game. I'd like to think that I know how, like, as much as that game works in Japan in terms of like things like the interventions and JGB buying and stuff like that. That's also not free markets at work, but I understand more or less how those policies are implemented. I know I can read those institutions as best as I can, so I'm comfortable, trading that. And when I'm not, I'm not. But because I don't know when China could step in at any moment with a headline, real or fake, that's why I can't touch. That's why I can't touch China, to either direction. So to what you were just saying, if you want to play it, you can. There are derivatives, right? You can like trade the Aussie dollar, for example, or you can trade base metals, like iron ore's ripping and all that, right? And there's a bunch of stuff, but like FXI ETF, like that's just because it's listed in the New York Stock Exchange does not mean that it's now part of a capitalist system. No, that's still very much part of, so go ahead and do it. Just make sure that you understand you're not trading like Alibaba because of, their price to book or whatever the hell it is. Like that's a totally irrelevant metric. You're trading like what is the policy outlook regarding that company and its shares. Basically, that's how you should go about doing it. And if you're comfortable doing that, go knock yourself out. But if you are long because like Chinese stocks are cheap and they go up, that's the worst thing that could happen, because then you think that you figured it out and instead you've actually just gotten lucky and you don't even know that, and then so you have false confidence, and then you're going to go in bigger size and you're going to get burned, as many people who go long or short China eventually do. So I personally don't touch it. I'd rather trade the derivatives of it, Aussie dollar and whatnot. Like silver right now is ripping, correlated right now to CNY and stuff like that. So that's what I would do. But I would also look at just make sure you look at like USD CNH as a barometer of what's happening with Chinese policy. And people say like, how is that a barometer? It's like managed currency. Well, so what if it's managed? It's still a barometer. If it's a managed currency, yeah, but it's a managed economy. So therefore it's an accurate barometer, right? So that's how I look at that.
If you had to choose one, investing in Japan's markets today or China's markets today for a trade, which would you choose?
I already went. I already did I was hoping for the giant blast down at 9 a.m. Which I got, and I had to move my limit order up. But yeah, no, because I know, and the thing is, like, in reality, I probably don't know about either market equally, but I've convinced myself that I'm more comfortable trading Japan, and therefore I won't do stupid panicky things, because once again, we're not trading markets, we're trading with or against ourselves. So because it's a psychological thing, I can trade Japan a lot better. I can know when to get out, when, and I can prevent my losses and all that kind of stuff and take profit. Whereas China, I know that I don't know, and I'm just like, I'll just be panicked that at any moment, Papa Bear she can come in and just do God knows what, and throw a wrench in the in everything. So So yeah, that's what I do. And also, I mean, I wouldn't ever, not ever, but I wouldn't necessarily buy into. I mean, you asked me if I had to pick one today. I wouldn't buy an index that's up like 18% in the last 6 days or whatever. I'd rather buy one that just got trashed because of an LDP election result.
Having some technical difficulties on my end. Sorry for that. I will edit that out. No, that's a fair point. Last time you and I chatted, you were talking about the connection between the carry trade and some of these retail traders from Japan buying U.S. large cap tech, in particular stocks like Nvidia. Any major changes to that? I mean, tech has, I think you can argue, largely struggled relative to other sectors, which are getting some better relative momentum as of late. But is that activity still ongoing?
Yeah, I'm glad you brought that up. Actually, so there has, since Black Monday, yeah, that kind of put a pause on the, because before that it was like you couldn't, the NISA year to date was the greatest thing ever, and the yen was the worst thing ever. So like getting out of like your cash yen and just buying like NVDA or buying the All Country World fund or the S&P 500, like all that, like a yen based investor of the S&P 500 was making a lot more return. Like the return profile is a lot better than a USD based, US based investor of that same S&P 500 index, because you're getting the currency appreciation part as well. So things were working out great until one day the Nikkei dropped like 11% in a day. And the day before that it dropped, or the trading day before that, and Friday before that, it was down 5%. The day before that it's down 2%, and so on. So that definitely put like a pause on things. But as I told you last time, I said that it's not necessarily going to stop people from hating the yen or think that the yen is like a safe haven, or like, oh, I should actually just keep my mattress stuffed with like, paper bills. They're just going to not, they're going to restart. I mean, a lot of NISA flows are kind of like just automatic anyway. It's just like just automated, like kind of, monthly, out of your paycheck buying. But it's going to restart. And when it does, though, it's just going to be weighted more towards foreign equities, especially with like the NASDAQ hitting record highs once again, while the Nikkei has yet to, it's like 4% off, or maybe more now at this point, off of those like June or July 11th intervention smackdown moment highs. So the flows have changed, and they've not come to a trickle, but they have slowed down. But the ones that are still existing, they are more weighting proportionally towards foreign equities than they are the split for domestic and foreign. Now, I'm also glad that you brought that up too, because there's also this. I said a moment ago that there really isn't a difference between any of the candidates for the LDP election. Let me contradict my own statement. The thing about this guy Ishiba as well, that's unique, is that he had in the past brought up this subject of, or this idea of, taxing capital gains, which is the exact opposite point of what NISA is. NISA is a program of, tax-free investment. So what does that mean for NISA then? And so since then, he's been saying, like, he's been saying over and over again, like, oh, like, I want to support like tax-free investment in NISA type of programs and all that kind of stuff. But people just seem to they just seem to remember that about him. And Kishida, the last guy who just sadly walked, is done as prime minister. When he became prime minister like 2 or 3 years ago, whatever, he tried to institute, or just began talking about increasing capital gains tax on investments, and then like the Nikkei plummeted as a result of that, and he had to walk that back. So, and that was like called the Kishida shock at that time. So people are kind of now hesitant that this guy has this reputation of wanting to tax, capital gains in the midst of equity markets blowing up on NISA investors. And now what? You're going to get taxed on your, like, when you're selling. when you were just told that you wouldn't be. Like, so there is that kind of hindrance. Then that's like people aren't believing this guy. It's a matter of sentiment. It's not a matter of real like a policy, you know. So that's the relevance for NISA, or the update, if you will.
Question from somebody on X, going back to the yen level you focused on before August 4th was, I think, the 152 level. Any levels you see as critical support or resistance at the present time? Is there some level for you, Weston, that the yen hits that's like, oh shit, time to go all in or time to go all out?
Yeah, so I'm still looking more at yen futures, because I had a had a long yen futures position that was getting killed, and I was close to. I actually did start to stop out like my first layer, but then the Friday surprise blast up got me back profitable. But if you look at December yen futures, you'll just again, it's just the round numbers. So 69, 0.0069, that's where you saw bottom in JPY futures, and blasted through the 7 handle, or 0.007. So that's what I go off of, and not necessarily off of like the spot rate. And I can't, like, people always ask me like, what's that, you know, kind of equate to for the spot rate? And I can't, the reason I can't give you like, you know, even, you know, I give you like a sort of like a, you know, a figure, but that's only relevant for that day, because we're talking about, first of all, we're talking about something that's being quoted as JPY USD, not USD JPY. And second of all, and more importantly, we're talking about futures. Futures trade, they don't trade in line with the underlying. They kind of converge at expiry, but we just rolled September futures over to December. So now you have a whole bunch of time. You have the full quarter left till expiry as the front month of, you know, December yen futures trading. And so you can have like, you know, like over a 1% difference in that, right? So I mean, like Friday, for example, you saw, what was it? Dollar yen go to what, 146, 146.48, 146.50, I guess you call it. I mean, yeah, I guess that's a level. But what's more likely of a level? How about like the round level of 69 on yen, which is where on yen futures, where it's bounced off of, where you had 24,000 contracts trade and immediately shoot upwards through the 70 handle and back upwards. So I would just like just keep using like those levels. They seem to be working. They seem to be working much more so than arbitrary spot dollar yen levels of resistance and all that.
Weston, since I know you want to get back to trading, talk about your Substack and other ways that people can reach out to you.
I don't want to get back to trading. Yeah, so I've been working on this kind of overview of what China's doing, and if anybody who's familiar with my work from the Market Death podcast, there's an episode called China Turmoil Week or something like that. Okay, I'll like put out a description or leave a link in the description for it. But I basically go through an entire week of absolute turmoil that happened in China's markets. And so like I go through like a day by day thing, like this is like, okay, Tuesday 9:15 China pre-market casual. This is where like they set the yuan fixed rate. This is where like the indices opened. This is what happened. Here's what happened with like the real estate sector. These people went to go protest like the shadow bank industry, that these asset managers that suddenly don't have their principal, let alone their kind of 7% coupons that they're demanding. And they went to go protest, and then police showed up at the door, told them not to protest, and then they got pissed off and all. So I'll go through like each kind of like day, and I want people to like just watch that just to remind yourselves at times like these, like that happens in China too. Okay. And then in addition to that, like this is what that other episode I was talking about from when they started hiking, when the Fed started hiking rates and China just snuck in like that last everything, it takes or whatever it takes moment. That was actually from when I was at Real Vision and when I released that. I'll put a link in that too and take a look at that. And again, these and just like watch those two things and you'll see like what's currently happening isn't any different. The whatever takes moment is currently happening, and then it inevitably results in the China turmoil week sort of thing. So I'm kind of putting all that together, and I'll put that, and I'm just compiling that for Across the Spread right now as we speak. But otherwise, just be aware that China, for the moment, does now matter for green and red blinking ticker markets. So that is going to be intense focus of mine. Oh, I'm sorry. I just want to say one more thing too, Michael, about just a quick update on the Bank of Japan as well. Given this kind of new administration. So we're actually now, as far as Japan policy is concerned, we're in a state of like we have no idea what the hell is going on anymore, because Governor Ueda and company did not change interest rates. They didn't lift interest rates at their last meeting, and they gave a very dovish sort of press conference, if you will. And if you take a step back and you look at what the Bank of Japan, not like kind of meeting to meeting, but if you look at the bigger picture, right? The Bank of Japan, specifically Governor Ueda, is a horrendous communicator to markets and all that. Again, it's because he got like arm twisted into this job that he shouldn't be having. But if you just look at it like from in April of this year, he literally was like, yen problem, currency problem, whatever do you mean? And then the currency the dollar yen went from like 155 to 158 to 160 and got smacked down, but had to get yen intervened upon. Okay. That's because, and he did that kind of whole act of like, whoa, what do you mean currency? Like what currency? And that was like all over papers and everything. Like the Bank of Japan governor does not think that there's a currency problem. And so he's like overacting, if you will, right? Then you have, the July like shock rate hike and all that kind of thing. The Japanese like kind of media and Japanese investors, they weren't necessarily kind of pissed off or like, shocked at that, but they were more disturbed about the communication or the lack thereof that they would suddenly do that. Not the actual rate hike itself and all that. They're saying like the blow up in markets and all that. It's because you didn't fucking communicate. It's because you like leak things through the media. And so this past meeting, there's a lot of questions about like communication issues, because the last between the last two meetings, that's when, Black Monday happened. They shock rate hiked. They had their press conference, and then Black Monday happened like, 2 days later. And so this is the meeting that followed that. And they're like, dude, what the hell? Explain yourself. And so, and at that meeting, he said, at this last Bank of Japan meeting, he basically said, we will do a better job at communicating, followed by like a horrendous like, communication of other things, of what their policy direction is. So we don't know what the Bank of Japan is thinking or doing or saying is basically the thing. Like it's they're not on like a path of this, or that they might be, but we don't know. We have to kind of erase all that and look at the bigger picture. They go to like extreme ends. They're hawkish. They're very dovish. They care about the currency. They don't care about the currency. So that's happening on the Bank of Japan like monetary policy front. In addition to that, you have this guy Ishiba, who's going to be the new prime minister, appointing, new people in Ministry of Finance and all that kind of thing. And like I said, he has no like actual ideology, because his goal has been a 40-year goal to like, fifth time's a charm, finally got into the prime minister role. And so he's just going to do whatever it is that he needs to do. And so we don't even have necessarily a read on him either. Is he going to tax capital gains? Is he not going to? He just did a flip this weekend. This guy has been very critical of the Kuroda Bank of Japan, extremely easy policy. He's been very supportive of rate hikes this whole time, like up until yesterday over this weekend, when he gave an interview to NHK broadcast in which he said, and I tweeted about this, he literally said, the Bank of Japan must stay keep policy easy. Like, dude, you just had your entire thing. You've been trashing Kuroda for like years, and now that the markets blew up on you 5%, like because Nikkei futures blew up on you 5% upon your announcement, now you suddenly are like, no, let's get that central bank put in. Like, you're a ridiculous douche pickle clown. You haven't even started yet. So, as far as Japan policy is concerned, we have no idea who these people are, what they're doing, what the prerogative is, or anything like that. Whatever they say, you have to take with like many grains of salt, and don't actually think that that's what the policy is. They're just very bad at communicating, and or just have like very unrelated motives. So that's what I'll kind of end on with regards to.
I love Unfiltered Weston Nakamura. Everybody, please make sure you follow.
Sorry
Weston.
for the rant.
No, I love it. That's great. Everybody, please make sure you follow Weston on X. And I'm sincere when I say this. Check out his Substack. He really does very good, thoughtful research. Appreciate those that stayed up watching this relatively late. We'll see how this week plays out. But everybody, enjoy the rest of your nights, or if you're in Asia, the rest of your trading day. Weston, appreciate you.
Thanks. I appreciate your inviting me every time Japan blows up. Let's do this again soon, probably.
You're the go-to guy, man. That's it. The whole world's falling apart. I'm telling Weston, you got to do